Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here with our SPY and ES systems. We also have trending type systems for 401k. We've been doing that for about 20 years now. And our clients include individual traders, mom and pops, and also professional institutions, which I consult with on a weekly basis. If you haven't done so, you should subscribe at least to our free newsletter. When you're on the website, there's a link to subscribe. Put your email address in there. I send out free newsletters from time to time. Okay, so let's go ahead and get started. This is my back-end recording that I use for our web-based newsletters. So let me go ahead and start this. And these weekend newsletters usually take about anywhere from 40 to 50 minutes. So they're quite comprehensive. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone's had a nice weekend so far. As you know, it's Super Bowl Sunday, so if you're going to watch the game, hopefully if that's your thing, hopefully you guys have a good time and have a good plan with that. I wanted to get this newsletter done so you had plenty of time to review it before then. But if you don't, remember you can always view the newsletter tomorrow. These weekend newsletters are good for at least the week, not just for one day. So this newsletter here, it's divided into 8 major sections. Actually, I don't have any trade ideas. I need to take that out. But comprehensive, we do a top-down approach on the market. We look at the major indexes. Again, top-down approach from the bigger picture charts all the way down to the smaller time frames, 60-minute, 15-minute, things like that. We're also going to look at some very important market indicators. The VVIX, for example, gave a great signal recently. Warning sign in the market before the pullback, and we also had the breadth indicators, which were showing some interesting things. We'll also look at the market sectors, just to review those really quickly. We'll look at bonds and the 10-year treasury yield, US dollar, and cryptocurrencies. We'll also review commodities and, of course, precious metals. Okay, you can see below the table of contents here, I have my observations for the market. Okay, so first off, as you know, the market had a pullback last week. S&P lost about 1.1%, Nasdaq about 2.5%. Small caps, IWM lost the most, down 3.4%, and the Dow lost the least. Again, the previous week, the S&P basically stalled at a resistance level, pulled back. Remember, in the short term, we're observing what appears to be a 3-wave-like pullback ABC structure. That's what I favor at this point. Eventually form a higher low, and maybe we get one more move to the upside. Okay. From a symmetry perspective, the S&P is essentially pulled back. Hasn't really broken symmetry, but the Nasdaq has. So that's a little warning here, short term. The Dow Jones has a very obvious symmetrical triangle formation. You want to keep an eye on that. The Dow's been underperforming this year. It outperformed last year, but I do believe it will outperform again sometime this year. So keep an eye on that. Again, should the market ultimately form higher lows here, which I do favor given the fact that the market rallied up so strongly. If it does rally to another high this spring, sometime my target would be around the 4,300 to 4,350 area. Okay. Very, very short term, I'm viewing a possible little bear flag which formed on Friday. I'll show that on the 15-minute charts. Guys, next week, CPI on Tuesday is extremely, extremely important. Market's going to respond strongly to that. So we'll see the market's reaction to that. One area that stands out right now is energy, especially the oil services. The US dollar has rallied out of a wedge, and that's caused especially weakness in the precious metals. I believe the precious metals, GDX, gold, are going to go through some sort of ABC 3-wave consolidation, form a higher low, but that may take some time. In the short term, watch for some support on gold near the 50-day moving average. Okay. Obviously, longer term, we have wild cards that will play out long term, such as earnings. Mike Wilson warns about long-term earnings will degrade, and ultimately that will be reflected in prices. We do know a recession's coming, how deep will it be, etc. And of course, Russia as well. Next, let's go and move. Take a look at what performed last week. So this shows you the index sector table, what transpired last week. So you can see again, the market lost last week with the Dow, or the small caps down the most, and the Dow down the least, S&P down about 1.1%, Nasdaq about 2.5%. As far as the major market sectors, pretty broad-based weakness here. The strength, of course, was concentrated in the energy sector and drugs. U.S. dollar had a good week, up 0.6% or 0.7%. Cryptocurrencies fell with the market, and they fell stronger than the general market, where they're more volatile, though. Commodities, despite the dollar being up, most commodities were up here, save for copper, which was down 1%. But big gain there in gasoline, up 16.4%. Crude oil up 8.6%. General commodity index up 3%. Wheat up 3.8%. And wheat looks pretty good here, guys. In fact, I added it as a trade idea. Precious metals were all weak, especially the stocks. Again, they're in a strong correction here. I believe some sort of ABC correction that may need to unfold over time. And as far as the bonds, TLT down 3%. 10-year Treasury yield up 6%. Next, item number 3 shows the market calendar for this week, news calendar. Again, CPI on February 14th, Valentine's Day. That's a big one, folks. That's the biggest one this week. A lot of other news here to monitor as well. We're mostly getting through earnings season, as you know. Next, image number 4. This shows you the seasonality per month. And again, as I've stated, February is usually a lot of times one of the weaker months of the year, not the weakest, which tends to be August and September. And usually that weakness begins within the first week or two of February, and that's where we're at. So we'll see how February works. January was a good month, as you know. Next, moving to the major indexes, chart number 5. Here's the monthly view of the major indexes. Again, it's only February 10th, but this shows you the bigger picture. We had that blow off of the previous bull market from the 2020 timeframe to late 2021. Then we had that strong correction last year, bear market. The Dow and S&P got near their lower Bollinger Bands, have bounced off of it. And you can see the S&P's had tested the middle Bollinger Band. Nasdaq still well below it. So we'll see how this year favors. I still believe longer term, we're in a longer term bear, but we'll adjust to whatever occurs. But that's my opinion. We're in some sort of uptrend in a bull market, in a bear market, I'm sorry. Next. Chart number 6, here's a weekly view of the major indexes. So again, as you know, indexes bottom there in late September, early October. We had 5 clear waves to the downside on the daily charts, as I've already covered. We had a really good rally up into the late November timeframe, higher low in December, and we've moved up nicely since then. You can see the S&P broke its year-long downtrend line, same for the Nasdaq, etc. The Dow has been languishing a little bit this year. It's more forming a coil formation, as I'll show on the daily when we get to it. Next, chart number 7, here's a daily look at the major indexes. So Dow's, just kind of mostly going sideways. The S&P, it's got a lot of these have support near their middle Bollinger Bands, which is the 20-day moving average, as you can see. Next. Chart number 8, here's the Dow. So like I said, this is my best guess at some of the wave structure on the Dow. So right now, over the last couple months, the Dow has been forming a very obvious symmetrical coil-like pattern. So energy is building here, and the direction this breaks could be a strong move, whether it's to the upside or downside. But keep an eye on this. I do believe the Dow will start to outperform sometime this year. Remember, it's lagged this year. It gave the football to the Nasdaq and tech area. Last year, it outperformed. So right now, it's forming a very obvious coil. Next, moving on to the S&P 500 chart specifically. Here's a zoomed in view of the monthly. Again, we broke through this little downtrend channel. We broke through it there in December. And up this month so far, but off the highs for now. Next. Chart 10, here's a monthly view. And this is a chart we've shown many times before. This uses two exponential moving averages, the 8 and 13 EMAs. Those are fib numbers, as you know. Again, they're not perfect. They're always going to miss tops and bottoms, but they're pretty good guides overall. You know, they've called mostly these previous bull and bear markets very well, such as the top in, late 2000, the bottom in 2003. So the top there in early 2008, went back long. And again, it's not going to ever catch up the bottom or top. Moving averages crossed back in late 2009, but all these pullbacks never had a negative cross. They pinched. But we had a negative cross last year, and even with this rally up, they're still not close to crossing. Again, I don't trade off of this, but it's just a good overall guide to look at. Next. Chart 11, here's a monthly view of the S&P. Again, it shows that uptrend from the 2009 lows. We feel that we ended the bull market is a fifth wave high here in late 2021. That was our call. Stop. Lay down. Sorry about that, guys. I had one of my dogs. But anyway, so we view that we ended a bull market in late 2021. We still overall view this as a larger bear market, but we'll continue to monitor. Next. Chart 12, here's a weekly view. Shows this expanding pattern. And as you know, we broke over this year plus downtrend line here in early January. Also took out the 50-week moving average here, which is always a good guide. And one thing I've been talking about over the last couple months is if we have a symmetry move, where if you measure this rally from the early October lows to the December or to the November highs, add it to here, you would get a target roughly near the 61.8 fib, around the 4,300 area. Okay. So overall, if the market forms a higher low and rallies up again, that's kind of my target area. Okay. Again, there's a lot of people calling this a new bull market, but really, I don't need to worry about that, and unless prices get way above here. So for now, that's what I view. And another thing to watch here over time is this 60 link stochastic. This 50% area tends to be an important area. You can see it was resistance last year at that August highs, and now it's approaching the 50% on the underside. So that's an important area to monitor as well. Next. Chart 13, here's a daily view of the S&P. So again, you can see the downtrend line from the late December 2021 highs. We had this series of lower highs last year. Okay, we finally, again, we reclaimed the 200-day moving average roughly a month ago, several weeks ago. We held it. That was a positive. We broke over this downtrend line. Okay, our target initially was this area, and there's an open gap here. These gaps like to be filled on the cash, so that's roughly 42.18. So notice I could also draw an uptrend line from here. So the 20-day moving average here in blue is support, as well as this uptrend line. Again, I favor some sort of higher low and then maybe another push up. Again, this area in here, especially this 4,300-ish area, 4,300, 4,350 is a big area. We'll see if we can get there over time. The RSI for now has broken this trend line. That's something to be aware of. But next. Chart 14, here's the zoomed in daily view of the S&P. You can see how we broke this little tight channel. Now we have the 20-day moving average to watch. Next. Chart 15, here's the daily KISS trend system. So we have all these reversion and mean type systems, but we also have these KISS trend systems. And last year, given it was a bear market, the KISS systems did some longs in the indexes, but usually for maybe a month or two, like you see here in July and August, where the system went long here and then got out basically right here. Okay. And So the system also did a long from October to December, then it got out, and then it went back long in January, and it's now raised its stop 3 times. STS, that's smart trailing stop. And so that's the way the systems work. They try to give wiggle room and then they constantly raise a stop, kind of like a protection. So again, guys, should the market form a higher low here above, say, this ATR and then rally again, the system will simply ratchet the stops up. If the market decides to crash and burn, the system will stop out. So it's a nice guide. But one thing coming into last week, the previous week, we had a Demark 9. We also had the moving average ribbons here, which are a great guide. They were too expanded. Look how expanded they were here. When they get too expanded, you're due for reversion to mean action. Okay. Now you're getting a pinching action. Just like back here, you had a pinching action, and that was a buy signal. So we'll see if this results in another bounce from here. Next. Chart number 16, here's a weekly version of the KISS system. This did a great job of avoiding the 2022 bear market. It actually went long in July earlier than the daily and then got out right here. So that was a pretty good job. And it went back long kind of late here, and it's still long with a very wide stop. I usually don't trade the weekly KISS systems. We use them just as a guide. Next. Chart number 17, here's another version of the weekly that I haven't been showing. It actually went back long earlier. It went back long just off that October low, but then this here wasn't a great entry. So anyway, we'll see what it does up in here. But again, for the KISS trend systems, I'm more inclined to follow the daily versus the wide weekly. When you're in a very strong bull market, you can use the wider weekly as a guide. Next. Chart number 18, here's the 4 time frames we like to follow with these custom indicators of ours. So here's the daily at the upper left. You have the Demark 9. The ATR is a big support. Again, the moving average ribbon got pretty wide here. Remember, they get too expanded, they need to contract. Okay, and when they pinch, that's when you get your bigger moves. The half day, that's 195 minute. You have the ATR. We have an obvious 3 wave here. So in an uptrend, 3 waves are usually bullish. So we'll see if we find support there. We have a little buy cycle on the 130 minute and on the 60 minute. Next. Chart number 19, here's Tesla on the KISS trend system. So you can see what Tesla's done. It went long back here in July, then got out in September. It avoided all that huge correction into the 100 area. Now, it didn't catch the lows, obviously, but it went long back in here. Still did a pretty good job. And you can see it's got, what is this, 3, 4, 5, 6 higher low stops, currently 171. Moving average ribbon's a little wide here, so maybe probably needs to pull back here a little bit. And you also had some negative divergence here, but KISS system did pretty well in this, as you can see. Next. Moving into the smaller time frames in the S&P, chart number 20, here's the 2-hour time frame. So you can see we stalled right around this 4,200 area about a week and a half ago. That was a little high back here in August. Logical area to stall from, which we did. So far, we have a 3-wave pullback here. These are your longer term supports below. This 4,100 area is a short-term resistance. Be aware of that. Next. Chart number 21, here's another 2-hour review, zoomed in. So we broke this uptrend line last week, but one thing to monitor here is symmetry. So after we broke out of this consolidation from December into January, our first major pullback here was mid-January of 130 points. So far, we've had about 135 points. A slight break in symmetry or roughly the same. Now, we do have what to me looks more like an ABC pullback here. Okay, but it could still form a higher low and still chop around longer because of this symmetry break. We'll see. But I ultimately do favor some sort of higher low again. But we'll react to whatever occurs. Next. Chart number 22, here's a 30-minute view. Shows you this same ABC-like pattern. But notice this resistance right around this 4,100 area. So this is a big area, guys, where the market could, find resistance and have another little pullback before the CPI. Next. Chart number 23, here's a 15-minute view. So this is what I warned about in my opening comments, that you have a potential little 4th wave wedge here. And so you could also perhaps on Monday see one more pullback, kind of like this, and then maybe we get a rally. We'll see, guys. but that's just something to be mindful of. Next, let's move on to the other indexes. Chart 24, here's the Qs. Again, as you know, we broke this weekly downtrend line 3 weeks ago. So far, stalled around that 38% fib. This dotted line shows you some symmetries, and you can see the fibs. Next. Chart 25, here's a zoomed in daily view. So we stopped at this supply zone, but so far we've pulled back, and this is a potential support area in here that I'd look for a bounce. Volume patterns still look fine. Again, moving average ribbon simply got a little wide up here, and it's contracting. Next. Chart number 26, here's a zoomed out daily view. Again, 20-day moving average here, 200-day moving average is your bigger supports. Next. Chart number 27, here's the KISS trend system. So it went long in January, just like the S&P. Now it's been able to raise its stop 5 times, currently at 29 or 291, 292. So we still got some room there. Moving average ribbons, you can see, just got too expanded here, and so they're contracting, working that off. So hopefully this holds this STS, and then we get another push. But you can see we had a Demark 13 near those highs, so it was a logical area to pull back from. Next, chart number 28, here's the 4 time frames. So similar look to the S&P. Again, we have the Demark 13 on the daily. We have the ATR here as support, ATR support on the half day. We did leak oil on these smaller time frames or below the cycles and the ATRs. We had a little Demark 9 on the 60-minute. Next, chart number 29, here's a 60-minute view. So one negative short-term, guys, here is the largest pullback was this 11-point pullback here. This is 16 points. So we do have a break in symmetry here. So that's what I'm saying is it may not just be an easy rally up from here. We could form perhaps a lower high, come down again, and then maybe go if we're going to form a higher low. But when you break symmetry, usually odds favor at least a lower high. So it's something to be aware of and think about. Next, chart 30, here's a 15-minute view. Again, you can see we're on this channel. But if we break this, this is your next support zone. This is your next demand zone around here. I'll be watching for support. Finally, chart 31, here's IWM small caps. So they've also pulled all the way back into this previous breakout area. We'll see if they find some support here. All right, guys, that does it for the major markets. Let's move on and look at some of these indicators. Chart 32, here's the VIX. So the VIX trying to find a little support near its lower or middle Bollinger Bands. It had spiked outside of its upper Bollinger Bands last Friday, but came back in. Next, chart 33, here's a comparison chart of the VIX to the VVIX. Remember, the VVIX measures the volatility of the VIX. Now, this gave a great warning last week. So this was front running. It was outside its upper Bollinger Bands last week while the VIX was not. That was a big warning. And usually that doesn't happen. Usually the VIX and the VVIX move pretty lockstep with one another, but clearly they did not this time. That was a warning, and it's still outside its Bollinger Bands. Now, if this closes back inside the Bollinger Bands, that is a logical or a, what is the word I'm looking for? An objective trade signal when this closes back inside. So keep an eye on that. Next, chart 33. Here's another very useful chart. This has the S&P up here, and I have the VIX here with the Bollinger Bands. It's plotted as a histogram. I have the VVIX here, plotted as a histogram. You can see, plotted this way, you can more easily see when it goes outside the Bollinger Bands. We also have the CPC. We have the NYMO, which went below its lower Bollinger Bands. I think it's still below there. So that's a positive potentially for a short-term bounce, and the NYHL below. So very nice chart with a bunch of indicators all on one. Remember, guys, on our default newsletters, we give you the live chart URLs to these so that you can use them on your own instead of just seeing static images like this. Next, chart 35, here's the NASI system with the 2 and 5 exponential moving averages. It's been a pretty great guide overall. Notice the 2 is closing below the 5 EMA here. So that's a warning. But to me, what I like to do with this is use a confirmation method. So what I do is I put a horizontal line on Friday's lows. So to get a confirmed sell, you need to close below this line. Okay. Just like back here, when it crossed up, you could have had a confirmation buy, taken out that candlestick high, which occurred right here. Same way here. Again, using the confirmation method will sometimes get you in at worse prices, but it also avoids some whipsaws. So just be aware of that. We do have a cross here, but we don't have a confirmation by this method. Next. Chapter 36, here's the nice indicator. One of our members posted this, the NYSE advancing issues in the NYSE. It's useful to note times of divergences. And again, back in early January, this gave an early heads up as this was this was ranking up, rallying up while this was flat. You could see a little spike here recently. Next. Chapter 37, here's the NYSE highs and lows. And you could see how we were overbought a week and a half ago when it was outside the upper Bollinger Bands, the new highs. Next. Chapter 38, here's the Nasdaq with the highs, 52-week highs minus the lows difference. And notice here, guys, one thing I want to point out, you could also use the same confirmation method. So last year, every time this got near zero was a great sell signal. But this year, it's been staying above zero. So using the same confirmation method, when it went above zero, we could have had a buy signal here, and also it's now negative. We could use a move below here to have a sell signal. You could see some examples before. Next. Chapter 39, here's the weekly version of that. It's a little cleaner. You could see last year, you had, like here, you had it, the difference went above zero, but you never had a confirmation above, and then it simply fell back. So you never have a confirmed buy here. Here you had a confirmed buy when this went above zero on this candle. That occurred here in early January. All right, guys, that does it for some indicators. Let's move on and look at the sectors real quick. So chart 40, here's XLK Technology. Again, it's pulled back. It's got a previous breakpoint here. We'll see if it finds support here or not, or the 20-day. Next, chart 41, XLC Communications Sector stalled right at this supply zone. That's a resistance zone. It's pulled back now to the 20-day. Next, chart 42, semiconductors. They've been fairly strong. So this has been one of the stronger sectors. You can see how far off the lows that it is. Next, chart 43, financials. That's also been one of the stronger sectors, still holding this uptrend line. Next, chart 44, banks, also still holding this very strong, like the financials, still above its 20-day here. Next, chart 45, here's the transports. Got a resistance up here. We didn't quite make it to there. Got a longer term uptrend line here to monitor. Next, chart 46, XLI Industrials, one of the stronger sectors. Again, not very far off the highs from 2021 and early 22. Next, chart 47, materials pulling back a little bit here. Got the 50-day moving average right here to monitor. Next, chart 48, consumer discretionary, pull back off this demand or supply zone. Got some support here at the 200-day moving average to monitor and rising 20-day. Next, chart 49, healthcare. It's been pulling back, but you got kind of a wedge-like look to it here, something to monitor. One of the stronger sectors last week. Next, chart 50, real estate, pulled back off the demand supply zone. Next, chart 51, logical, looking at home builders. That's been a very strong sector, as rates pulled back, but now pulling back here as rates have bounced. It got way overbought here. Look how wide the ribbon was. So watch the 20-day moving average here now, and that's your longer term uptrend. Next, chart 52, XLE Energy. So this is one of the more interesting sectors to me. If this were to rally up, this could form perhaps an ascending triangle, something like this, boom. That's something to possibly be aware of. We'll see. Remember, a lot of these companies have strong fundamentals, low PEs. Next, chart number 53, oil services. Again, this looks stronger. You have a nice coil here. This could easily break out if it wants to. Next, chart number 54, ExxonMobil, one of the big boys. This had a nice breakout on Friday. Again, long-term bull market here. Next, chart number 55, Devon Energy, not as strong, but you had a long trigger here, Steve talked about, and a downtrend line to here to monitor. We closed just above its 200-day moving average again on Friday. Next, chart number 56, EOG, another energy stock forming a big coil. Again, if you want to keep it simple, you could just use XLE and OIH, guys. Next, some other things to monitor. Here's the S&P versus emerging markets. As you know, they kind of led, but at the very moment they're leading. This pullback has been stronger, so they're pulling back stronger than the S&P, and the dollar rallying has something to do with that. Next, chart number 58. Here's the S&P versus the Chinese market. Again, the Chinese market came out of the gate strong in November. Just look at that move, unbelievable. But it's also pulled back much stronger than the S&P recently, so just be aware of that. All right, let's move on to commodities. Chart number 59, DBC commodity index up 3% for the week. Again, longer term, I still view this as a bull market. This is a consolidation in the bull market. Right now, it's still working on this big coil. Next, chart number 60, here's the daily view. Again, still overall in this pattern. Next, chart number 61, crude oil up 8.6% last week, still overall in this kind of channel. Next, chart number 62, here's the daily views version, short-term monitoring this pattern. Next, chart number 63, natural gas. So natural gas has got absolutely pummeled since September last year, and it's in this potential support zone. Finally, a little up candle last week, more of a doji. We'll see if it can build some support here or not. Next, chart number 64, natural gas daily. Again, hell of a sell-off. They call this the Widowmaker. You know, I know a lot of people have been trying to buy this and getting stopped out multiple times. You got to be really careful with that kind of stuff, guys, trying to catch falling knives. It does look a little interesting here if it can clear this area. UNG and Boyle are the ETFs. I'm not showing those. But you had a nice move on Boyle on Friday. Next, chart number 65, copper. So copper's been pulling back the last 3 weeks. Logical to find resistance right near this 61.8 master fib area. Next, chart number 66, copper on the daily. One area to watch for potential support is this 50-day moving average and this extended trend line where it broke out from. Next, chart number 67, DBA, weekly view. Kind of a similar look to that weekly DBC, overall working on this pattern. I do believe long term it's going to have another big rally. Next, chart number 68, DBA in the daily. A couple weeks ago, we showed a falling wedge here. That was a nice early entry. And if you want to give it room, just have some sort of stop in place. Looks decent. I like the longer term charts. Next, chart number 69, here's the DBA S&P ratio. I haven't showed this for a while. It's forming a big coil here. So, you know, obviously whenever this ratio moves up, DBA is outperforming the S&P. So we'll see. Next, chart number 70, here's the monthly view of DBA again. Strong rally out of this 2020 low into resistance. Overall, given the volume patterns, given the light volume here, I do believe this looks overall more bullish consolidation. Long term, remember guys, this is the monthly chart. It's going to take time to play out. This 19 area is a big support. Next, chart number 71, wheat. Wheat's looking a little interesting here. You got a nice rally on Friday. Next, chart number 72, here's the tradable ETF, WEAT. Nice clean level here. Again, looks good as a valid setup. Next, chart number 73, coffee. As you know, coffee, nice correction last year, but it bounced perfectly off this horizontal line, which was previous resistance. Just beautiful textbook. This could go in a textbook on technical analysis. Previous resistance becoming support. Next, chart number 74, coffee on the daily. Again, I talked about this a few weeks ago. We had a bullish break in symmetry here. That was bullish. That was a time you could have just jumped in long coffee, and I still think it looks really good in here. Next, Jabber 75. Here's the tradable ETF, JO. Again, same pattern and same, as you can see, that's the way to trade it. I highly doubt anyone's trading coffee futures here. Next, Jabber 76, uranium. For the week, it was up 2%. Longer term, we did break out of this wedge. Next, Jabber 77, uranium on the big picture view. Again, this to me looks like a long-term bullish consolidation. I was bullish on uranium back here when it broke out of this multi-year base. But remember, guys, again, this is going to take, if this is going to rally up again longer term, kind of like this, it's going to take time, guys. This is a monthly chart. Okay, but I do believe it does look bullish to me longer term if we wanted to give it room. It's going to take time though. It's not going to be a quick reward, like some of the short-term trades you might be used to doing. Next, Jabber 78, moving on to bonds and interest rates. Here's the 10-year treasury yield. So nice rally last week, up 6%. For the TNX, you could divide it by 10 here. So the 10-year treasury yield is 3.744%. But I've been talking about this potential ABC pullback, and that looks fairly valid. Next, Jabber 79, there's the weekly version of TLT. It moves opposite generally of TNX, so pulling back there. Next, Jabber 80, here's the daily version. Suckered a few people in a couple weeks ago when it went above the 200-day moving average, then lost it. Next, Jabber 81, high yield corporate. This tends to lead the market. So this topped out early. This topped out right around the 61.8 fib here, and it's been leading down a little short term. Next, Jabber 82, here's the daily view. We pointed out this island top almost 2 weeks ago, and that's been playing out. That's your longer term support now. Again, short term, this has been weaker than the market. Market tends to follow this. Next, Jabber 83, here's the S&P versus high yield corporate. And again, high yield corporate tends to lead, guys, but short term here, it's been a little weaker. All right, moving on, look at cryptocurrencies. Jabber 84, here's Bitcoin weekly view. This wedge we pointed out a couple months ago played out for a nice rally up to the 200-week moving average. That is resistance now, pulling back from that. Next, Jabber 85, here's the daily view. Again, we rallied off this big support area in January. We got a little toppy here. We had a little rounded top there that played out late last week. We'll see if that trend line becomes resistance now. Next, Jabber 86, here's the inverse ETF for Bitcoin. The ITI we showed as an idea. It's playing out. Next, moving on to the US dollar, chart 87, UUP. We've been showing it as a falling wedge here coming into February, and it broke out of that wedge. That has caused weakness in the precious metals area and emerging markets and Chinese markets a little bit. Next, Jabber 88, here's the index view of the dollar. Next, Jabber 89, here's the weekly view, again up 0.75% roughly. Next, Jabber 90, here's the euro, again moved opposite of the dollar. The dollar had a beautiful breakout of this channel, and that corresponded with a big pullback in the dollar. Next, moving on to the final part of the newsletter, let's look at precious metals. So chart 91, here's gold. So far on the monthly chart, gold is down 3.6%. It's been pulling back with that dollar strength. Overall, I still favor this pattern where the gold could eventually go to a new high in wave 5, but it got extended here, and my thought is it's going to need consolidation here now, which it's doing. Next, Jabber at 92, there's the weekly view. So nice pullback here down to its 9-week EMA. Notice your ratio, that's the GDX-GLD ratio. The stocks are underperforming here. You want to see that curl up short term. So right now that's a negative. Next, Chart 93, here's the daily view. So gold rallied out of this pattern in November. You had a series of higher lows here on the purple areas. You could have used those as trailing stops. So you'd have been stopped out of here about a week ago, okay, if you didn't sell higher prices. And now you're waiting for a reentry. Now I am watching for a potential bounce support near this 50-day moving average. We haven't tested this for a while, so I think we at least get a reaction bounce here. The issue I have though is I kind of doubt it's going to do something like this. What I think more is going to happen is if we bounce off the 50-day moving average, we're going to get a bounce, lower high, and then come down again, and then have a rally, kind of like an ABC. A down, B up, C down, then we go up. That's my favored view. Next, chart 94, GLD, GLDM. That would be a way to play a little reaction bounce if you want to. Next, chart 95, silver. Here's the weekly view. Stalled at this resistance area, as you know, a while back. Really nice rally out of this support area last year. So now we'll see if we can form a higher low in here. Next, chart 96, silver on the daily. I've been talking about this umbrella top, and that's been playing out now. Next, chart 97, ZSL. That was a way to play a rally in silver. It's the inverse ETF, ultra inverse, and that's been moving up. Still looks good. Next, chart 98, GDX, the gold stocks, mining stocks on the weekly. Again, perfect logical rejection right at that 61.8 fib, as you can see. Remember, guys, that 61.8 fib is powerful. Next, chart 99. Here's a daily chart. Again, we broke some support here and the trend line. We're also below the 50-day moving average. Again, similar to gold, I think this could be an A down when we get a bounce, B up, and maybe a C. If we form a higher low, then something like that. That's my overall guess. We'll see what happens. Next, chart 100. Here's the 120-minute view we've been showing in the recent newsletters. This looked vulnerable. Again, last week we lost that support, lower high, bear flag, sold off. So there you go. All right, guys, we'll see how futures open this evening, and hope you have a good time with your Super Bowl parties. Don't drink too much. Be safe, and have a wonderful rest of your day and evening. Take care.